in preparation of financial statements of companies, we have started solving the questions. Last class we saw, I think we solved illustration number, not 1 sir, I think it is illustration number 5. In the workbook you see we have solved a question illustration number 5. This question we solved. This question, Pioneer Limited sum. I want every one of you to please. Hello. So in preparation of financial statements of company, we discussed the entire theory part and we started solving the questions. Now, today we are going to solve the other questions relating to Schedule 3, preparation of P&L and balance sheet of a company. Come to question number 2, illustration number 2, very important illustration. So, we are solving study mat questions first. Illustration number 2. Okay, sir. Illustration number 2. Everybody please see this question. We are going to solve this question. The following is the trial balance of Omega Limited as on 31st March 2012. Though they have given trial balance, figures are in thousands and they have given debit balances, credit balances. Okay. Now generally I told you in the previous question, generally debit balances reflects what? What items will come in debit balances? Assets, expenses, losses. What items will come in credit balance? Liabilities, so incomes generally, and any kind of gains, so will come in credit balances. Now let us see first the debit side items. Land at cost, where it will come in balance sheet? PP. Plant and machinery at cost, PP. PP means property, plant, equipment, nothing but tangible assets. Next, trade receivables, current assets. Inventories, closing or opening? Closing 31st March 2012. So this is also current asset. Bank balance, current asset. Adjusted purchases, adjusted purchases, adjusted purchases. Adjusted purchases, P&L account, expenses. First of all, what is adjusted purchases? See, when we make purchases, any direct expenses relating to purchases minus purchase returns. So purchases, gross purchases, adding direct expenses relating to purchases minus purchase returns. That is called direct adjusted purchases. So we know, we discussed P&L account. Generally adjusted purchases comes in P&L account expenses side. Remember guys, where, most of the students when they see adjusted purchase now they are getting confusion. Nothing sir, adjusted purchases means purchases minus returns. Any kind of direct expenses relating to purchases we will add. So adjusted purchases. Next, factory expenses, P&L account, expenses. Any specific head of expenses? Any specific head? No, other expenses. In P&L account expenses, last item is there. What is that? Other expenses. There we will show this. Admin expenses, Same, P&L account, other expenses. Selling expenses, same, other expenses. Guys, you have to read balance sheet and P&L. We have discussed elaborately. 10 hours we discussed schedule 3. So again and again you have to read that schedule 3 format. Then these items will become easy for you. So factory expenses, admin expenses, selling expenses. These 3 comes in P&L account, other expenses. Debenture interest, finance cost, P&L account expenses. Which expenses? Specific finance cost. So there is head called finance cost. In that finance cost you show debenture interest. Next, interim dividend paid. Where will you show this? Interim dividend paid. Dividend paid or payable? Paid. That means it is not a liability. Only payable will become liability. This is interim dividend paid. Always remember, dividend is appropriation of profits. So therefore, it is adjusted from P&L account in reserves and surplus. So from opening P&L account balance, we have to minus this interim dividend paid. Because generally you give dividend from profits, na? So whatever the profits you had, from that profit you need to pay this dividend. So therefore, when you prepare balance sheet in shareholders funds, we have share capital. Then reserves and surplus. In reserves and surplus, all reserves we need to show one by one. The first P&L account. In P&L account, opening balance minus interim dividend paid. So this is interim dividend paid, not final dividend. So actually there are 2 types of dividend. Interim dividend, final dividend. Suppose once the year is completed and depending upon the profitability of that year, if company declares any dividend, that is called final dividend. In between the year, if company wants to pay any dividend, generally that is called interim dividend. Dividend includes interim dividend also. There is no separate treatment for normal final dividend, interim dividend. Both accounting treatment wise, provisions wise, they are same only. So therefore, whenever you pay interim dividend, remember it is not payable, guys. Suppose if it is payable, then it comes in current liabilities, other current liabilities. Because it is already paid. So therefore, it will show as an appropriation from the P&L account. It will not come in the liability side. Remember. So out of this, I think 2 adjustments. Star mark. Put a star mark you also. Because whenever you are solving the question, these star adjustments will make you uncomfortable. So therefore you have to focus more. So adjusted purchases, P&L account, purchases, normal purchases only, but after making adjustments. Interim dividend paid will be shown as a deduction from P&L account in reserves and surplus. Guys, you have to respond. Are you all understanding what I am speaking? Yes, now come to the credit side balances. Equity capital, shares of 10 is 300. Where will you show? Share capital, shareholders fund, share capital. Debentures, debentures, long term borrowings, very good. Long term borrowings. General reserve, P&L account. My question is, this P&L account, it is there in the trial balance, right? Is this opening P&L balance or closing P&L balance? How many of you say closing? Please raise your hand. This trial balance is showing P&L account balance, right? Is this opening P&L balance or closing P&L balance? Okay, how many of you say it is opening? Remaining? Remaining? Spectators, want to watch the movie, Sir, come on here. You came to CA inter-level, at least you should know by now, in trial balance, suppose they have given P&L account. What is that P&L account balance is? Is it opening P&L balance? Till now the profits which is accumulated. Or is this P&L account balance includes current year profits also? Is it opening or closing? Always remember, in the trial balance they have given P&L account, nothing told. This is always opening. This is opening balance. Then you have to find out current year profit. For that current year profit you have to add. Then you will get closing P&L balance. That closing P&L balance you need to show in the balance sheet, reserves and surplus. Hello guys, because majority of the students doesn't know this. They are thinking that since trial balance is given on 31st March 2012, this P&L account is also on 31st March 2012. That means they are thinking that this includes current year profit, which is not correct. Current year profit we need to ascertain now. So this interim dividend you already paid 18 na. This 18 you have to deduct from 72. Hello? 72 minus 18 plus current year profit. Then you will get closing P&L. That will appear in the balance sheet as a closing P&L balance. Guys, are you all understanding? Remember this. Securities premium, reserves and surplus. Sales, P&L account income. Which income? In P&L account we have two types of income. One is revenue from operations, another one other income. This is revenue from operations. Trade payables, current liabilities. Provision for depreciation. Provision for depreciation. Provision for depreciation. Long term provision, come on yaar, I already told. Provision for debtors, provision for depreciation, these are all provision against assets. They should not be shown on long term provisions or short term provisions. In long term provisions, short term provisions, we need to show which provisions? Provisions created on asset liabilities. Come on, these are all points we have discussed. At least those who came to my class, at least are you all able to recollect? Yes, now provision for depreciation. See, first of all, listen. What is this provision for depreciation is? Nothing but the total depreciation till now relating to particular asset. And if you see the trial balance, only two assets we had, land, plant and machinery. Tell me out of these two, which is depreciable asset? Because land is non-depreciable. Only plant and machinery is depreciable. So therefore this depreciation is relating to plant and machinery, first of all. Okay. Now second question. This provision for depreciation 172, is this opening provision or closing provision? I mean, closing means till 31st March 2012, whatever depreciation accumulated, this is 172 is the total depreciation till now, till the year end, or this 172 is the opening. It is not including current year depreciation. Now see, generally this is closing only, but you have to see the additional information always. In the additional information you see, you read the fifth point. Depreciation is to be provided on plant and machinery at a 10% on cost. That means this 172 is not included current year depreciation. Therefore, if you add current year depreciation, then you will get closing provision for depreciation. Hello. So therefore, basically tell me, in trial balance you have seen provision for depreciation. The meaning is that total depreciation till now accumulated. But you have to see the additional information also. Sometimes, see, anything which is given in additional information, the meaning is it is not yet adjusted. We have to adjust. That's why this is additional information. So additional information means not yet adjusted. So we have to make an effort to adjust this. So therefore, guys, in the fifth point clearly he told about depreciation is to be provided. So therefore current year depreciation not yet provided, so we need to provide. So for opening provision for depreciation, you have to add current year depreciation, then you will get closing provision for depreciation. Generally there are two ways to maintain depreciation. One is direct depreciation entry, like depreciation account debtor to asset, and depreciation you will transfer to P&L account. That is one way. Second way is transferring depreciation to a separate account called provision for depreciation. And in the balance sheet, you need to show the original cost minus depreciation accumulated, provision for depreciation. There are two ways to present the depreciation. Here, which case they are following? Second case, provision case. That means they are transferring depreciation to a separate account. They are not directly reducing from the cost of the asset. See, one way is to reduce depreciation directly from the cost of the asset. In that case, what is the entry? Depreciation to asset. Second way is you don't touch the cost of the asset. Whenever you provide a depreciation, the entry is depreciation account debtor to provision for depreciation. And depreciation will be transferred to P&L account because it's a loss. And this provision for depreciation is nothing but the total depreciation accumulated till now. So when you are preparing the balance sheet at the end of the year, original cost of the asset minus provision for depreciation you have to do. Then WDV of the asset will be shown in the balance sheet. So always WDV of the asset will be shown in the balance sheet. So you follow first method or second method, that depends upon the information given in the question. So in this case, company is following which method? Provision for depreciation method. That means they are not directly reducing depreciation from the particular asset. Rather, they are transferring depreciation to a separate account called provision for depreciation account. But this provision for depreciation, is it the total depreciation accumulated till the year end? Answer is no, because in the additional information clearly in the fifth point they said current year depreciation is not yet provided. Therefore, current year depreciation, if you add to the opening provision for depreciation, then you will get closing provision for depreciation. Not only that, any other adjustment is there relating to provision for depreciation, that adjustment is also need to be done. Okay. So, suspense account next. Sir, what is the suspense account? Suspense account means? That means, see, they are unable to find out. The difference came, 4,000 came, rupees in thousands they have given now, 4,000. Accountant is unable to identify what is this 4,000 is all about. But in the additional information, fourth point you see, important, everybody please focus here. Suspense account of 4,000 represents cash received for the sale of some of the machinery on 1/4/2011. Sir, they have sold some part of the machinery, sir, at the beginning of the year. And what is the sale price, sir? 4,000. So that sale value is this suspense account. So, and the cost of the machinery was 10,000. Whatever the machinery they sold, the cost of the machinery is 10,000 and accumulated depreciation thereon 8,000. Guys, you have to be very focused. Please concentrate here. So, in the trial balance, we have suspense account, sir. How much suspense account is there? What is this 4,000? Sale of machinery. When sale happened? Beginning of the year. What is the cost of the machinery sold? 10,000. What is the depreciation accumulated on it? Therefore, 10,000 minus 8,000. What is the WDV? 2,000. So, 2,000 worth of asset you sold for? Therefore, what is your profit? That profit you will show in P&L account, income, other income, 2,000, profit on sale of machinery. Everybody, now one more adjustment, very very important adjustment. Since you have sold part of the asset which is sold, in respect of that asset, whatever that provision for depreciation accumulated, that is also cancelled. Because when the asset is sold, it is no more there, you are closing the asset account. Therefore, the corresponding depreciation account also you need to close. Suppose I have two assets here. One asset I sold. That means this asset I will remove from my books. So relating to this asset, whatever the accumulated depreciation is also, that is also be removed. Therefore, the machinery whatever we sold, what is the depreciation accumulated on it? 8,000. So this 8,000 must be reduced from this 172 provision for depreciation. So therefore, opening provision for depreciation 172. That means 1,72,000 in 1,000, 1,72,000 minus asset sold depreciation. How much? 8,000 plus current year depreciation. Then you will get closing provision for depreciation. This closing provision for depreciation must be deducted from the original cost of the machinery. What is the original cost of the machinery? 770. But from the 770, in the additional information they are selling that 10,000 cost is sold. So 770 minus 10, that means 760. 760 minus closing provision for depreciation. Once again I am telling, please listen to me carefully. Very logical. Once you understand the concept, fear will automatically go away. Why people will fear? Because they are not able to understand the concept. First of all, everyone please concentrate. What is the cost of the machinery? 770, right? Out of 770, how much is sold? 10,000. That means 10 in 1000. Hello? So 770 minus 10, 760. That is the cost of the machinery, right? Relating to this machinery, whatever the depreciation accumulated. How much is the depreciation accumulated? 172. But this 172 subject to two adjustment. One is current year depreciation. How much is the current year depreciation? 10% on cost. What is the cost here? 760 into 10%. 76 is the current year depreciation. Because in the beginning itself, the 10,000 cost is sold. Therefore, what is the cost of the machinery available? 760, 760 into 10%. Therefore, 76 is the current year depreciation. What you do with the 76? You will add to the provision for depreciation. Why you add? Because that provision, whatever appear in the trial balance, it is not adjusted with the current year depreciation. Hello? Yes, why you are assuming like that? Because in the additional information, he clearly told. Suppose, Nana, this point is not there. Tell me what happens. Fifth point is not there. Then, that means this 172 includes current year depreciation also. Don't again add. Everybody. That means provision for depreciation, generally it is closing, subject to additional information. How many of you understood this point? Okay. So therefore, can anybody tell me what is the WDV of the plant and machinery, which will be shown in the balance sheet? Calculate and tell me. Closing WDV. What is the closing WDV? What is the closing WDV of plant and machinery? What is the closing WDV? See here. What is the cost of the asset? 770. How much is sold? How much balance? Minus provision for depreciation. Correct? How much is given in trial balance? 172. Minus 8. Why minus 8? Machinery sold na. In respect of that machinery accumulated depreciation, we should cancel. Minus. Plus current year depreciation. 76. 760 into 10%. Given in the question. Read the question. 10% of cost. Cost means this one, 760. 76. So what is closing provision for depreciation? 240. So 760 minus 240. 5. This is the WDV of the plant and machinery, which will be shown in the balance sheet. So, see, in respect of the machinery which is sold now, can anybody tell me what is the entry? Entry for the machinery sold. Suppose bank account debit. What is the sale value? Sale value 4,000. Correct? Accumulated depreciation account 8,000. To plant and machinery account cost 10,000. What is the profit? Profit on sale 2,000. Now this 2,000 will go to P&L account, other income. This depreciation cancelled. Machinery account, so 10,000 cancelled. Okay. Now come to the next point, additional information. So fourth to fifth point, okay. What is the first point they have given, sir? Authorized share capital of the company. What is the authorized share capital? 40,000 shares of 10 each. What is the importance of authorized capital? I am talking in the context of schedule 3. Notes to accounts, very good. I told you in the notes to accounts, share capital, we need to first present what? Authorized share capital. Next, the company on the advice of independent valuer wished to revalue the land at 3,60,000. So they want to revalue the land, sir. Originally, what is the land cost, sir? 220. That means 2,20,000. But they want to revalue at 3,60,000. How much increase? 1 lakh. What is that 1,40,000? Revaluation surplus. So therefore, land account data to revaluation surplus or revaluation reserve. That revaluation reserve will comes in reserves and surplus. Guys. Next. One more tricky point, sir. Declared final dividend at 10% on 2nd April 2012. Actually, in this problem, in the trial balance, they have paid interim dividend. But in the question additional information, they have given that this company declared final dividend at 10% on 2nd April 2012. So what is the importance of this point? Suppose generally if any company declares dividend, that becomes liability. But when they have declared 2nd April, that means on 31st March, is there any liability? See, actually there is a standard called Accounting Standard 4. That standard we will apply here. AS 4 talks about events occurring after balance sheet date. That we are going to discuss. See, dividend declared by the company after 31st March. But before approval of financial statements. Any event which occurred between the balance sheet date and the approval date is called event occurring after balance sheet date. Now, company declared a dividend of 10%. Whether this 10% liability, dividend liability will be recognized in the balance sheet or not? The answer is no. Because there is an amendment to Accounting Standard 4 which says that any dividend declared after 31st March will not become a liability. So therefore, it cannot be presented in the balance sheet. Because here the date is 2nd April. We are preparing balance sheet on 31st March. How can you say a dividend which is declared after 31st March is a liability on 31st March? So therefore, the latest amendment says, see, once upon a time it's a liability, sir. Before amendment to AS 4, sir, we have considered this as a liability and we will show it as other current liability in the balance sheet. But now the present scenario is that this dividend, whatever we are declaring after 31st March, it is considered as non-adjusting event. Which event? Non-adjusting event. Therefore, this event should not be adjusted in the balance sheet. This event should not be adjusted in the balance sheet. Guys, you see all the study material questions, they have given dividend declared. But in all the questions, you have to observe the date. For example, you see problem number 4. In this problem number 4 also, dividend is declared on 2nd April. Therefore, it is not a liability. 5th problem we have solved, there is no dividend point. Next to 6th problem also you see. 6th point also, company declared any dividend? No. So wherever you see dividend declared, you have to see the date. On which date company declares a dividend. Suppose 7th also not there. 8th also not, 8th there. 8th you see, 5% dividend on when? 2nd April, not a liability. So all the questions, wherever you see dividend, see here, this question also, directors declared a dividend of 25% on 2nd April, not a liability. So therefore, please understand, Anna, whenever they have given a dividend concept, okay, so you have to see the date. If the date is after 31st March, please don't consider it as a liability. Okay, so that's it. Yes, obviously, that is needless to say. Notes to accounts we will disclose. Okay, now this is question number, what they are asking, sir, you are required to prepare Omega Limited's balance sheet as on 31st March 2012 and P&L with notes to accounts for the year ended 31st March 2012 as per schedule 3. Ignore previous year figures and taxation. So this is the question, sir. So take 1 minute time, sir. I am going to solve this, and along with me you are going to solve this. So this is like a practice session for you. So you should write. It is not that just you do the auditing. What majority of the students are doing is that when faculty is reading the question, they are not focusing. First thing. Second thing is that when faculty is solving, they are not solving. See, this is not how things are going to work out. Later you should regret. So when you select a CA like course, you have to do hard work. There is no substitute for hard work. So when you are in the classroom, be 100%, give your 100%. That's how you will become a chartered accountant. So chartered accountancy, see, in your name, before the name, CA, you will put it now. That will not come easily. Please understand that. Suppose I am CA Sai Babu. So the point is that CA words, I put my name before. I have done so much hard work. That's why now I am able to put that. You also same. It is not that you will not do anything. There is no hard work. CA will come easily to you. It is not possible. Anything will come easily, will not give value addition to you. Something substantial is coming to your life, so it must give value addition. You have to do your 100%. So therefore, now we are going to solve this question, sir. But quickly we are going to solve this. Fast you have to develop. So this is illustration 2. Those who are watching the recorded lectures also, you have to solve. When faculty is solving, you also need to solve, so that you will engage, concentrate. It is not that answer is there with me, sir. No, you solve. Just you see the trial balance, nothing. No, you should not see any answer. Just in front of you, the question should be there. The trial balance should be there. And you have to watch the time also, how much fast I am doing. Because in examination hall, you don't have much time. See, I am going to focus on how you are going to approach these kind of questions in examination halls. Okay. First, what you are going to solve? Balance sheet P&L. Balance sheet P&L. Technically speaking, first we need to solve P&L, because current year profit, only you know current year profit, you can know the closing P&L balance. Only because closing P&L account balance will come in balance sheet, reserves and surplus. Everybody? But presentation wise, you have to present first balance sheet. So therefore, my suggestion is, in examination, whenever you are solving the financial statements question, first you write down the presentation. Balance sheet, P&L. Give the numbering, notes to accounts. Then you start filling the numbers. This is how you have to solve. This is the approach. So see how I am going to approach the answer. You do along with me. I am not going to give a separate time. Please understand. So balance sheet of Omega Limited as on 31st March 2012. So particulars, note, amount, rupees in thousands. Guys, I am going to use lot of shortcuts. I will scribble. So you also use shortcuts. In examination, of course, you have to do detail. But for classroom purpose, we are going to, quickly. First, equity and liabilities. In equity and liabilities, shareholders funds, first item, first head. In that, share capital, note number 1. Reserves and surplus, note number 2. Next, what is the third item? Money received against share warrants. Is there? No. Leave it. Next, what is the second head? Share application, money pending allotment. There? No. Leave it. Like that, every time when you are doing the problem, recollect the original format and whether that item is there or not. Not there. Don't write. Go to the next item. Like that, you have to solve. Next. That means when you are reading the question itself, you have to mark which items will come, which items will not come, like that. Next, what is the second head? Non-current liabilities, correct? In non-current liabilities, first one, long-term borrowings, there are, yes, what is that? Debentures, 3. Next, non-current liabilities, what is the second head? Deferred tax liabilities, there are, no. Other non-current liabilities, no. Long-term provisions, no. Next, come to third, current liabilities. First, short-term borrowings. Any short-term borrowings? Any short-term borrowings? No. Next, trade payables, there are, yes, trade payables there. Tell me how much? Trade payables 52, correct? 52, please check it. Okay, 52. Next, any other current liabilities? What is that? What is other current liability? Nothing, no other current liability. Next, any short term provision? No. So that's it, yaar. Total. Only direct items I am filling up. Notes, those items you have notes to accounts na, we will do it later. First you focus on the format. The second part, assets. So first, non-current assets. Non-current assets, first property, plant, equipment, there are, yes, land is there, plant and machinery is there. Note number 4. Any intangible assets? No. Any capital work in progress, any intangible assets under development? Nothing. Next, any non-current investments? No. Any deferred tax assets? No. Any other current assets, any other non-current assets? No. Next, current assets. First one, current investments, not there. Next, inventories, there are, inventories there. Inventories there. Can you tell me how much? Asset side, debit balance you have, inventories 86. Next, trade receivables, there are, how much? 96. 96. Next, cash and cash equivalents, correct? There are, I think they have given what? Bank balance, how much? 20. Total. Sale of machinery, P&L account, profit on sale of machinery. Sir, please understand, in trial balance, suspense account came which side? Credit side. That means bank balance they properly adjusted. Sale of machinery amount came na, that amount was adjusted in bank account. They are unable to find out only the credit. Suspense account they credited 4,000. That means what? Only credit side balance they are unable to find out. Debit balance is what bank account they properly adjusted. Guys, you need to focus. So this is what? The format of balance sheet. Now prepare P&L account. Statement of P&L account for the year ended 31st March 2012. P&L account, particulars, note, amount, rupees in 1000. So first is what, sir? Revenue from operations. Revenue from operations there, sir. Sales is there. How much is there, sir? Please see the credit side balances. How much? 700. Second, other income is there na? What is the other income here? Can anybody tell me? This is note number 5. We will prepare note number 5. And you already know what is this other income is. Profit from sale of machinery. How much is the profit? Actually 10,000 cost to accumulated depreciation 8,000. 2,000 is the WDV which is sold for 4,000. So therefore what is the other income? Profit on sale of machinery 2,000. That means 2. 1,000 sir you are writing 2. So that means income side total 702. This is total income. We will give breakup in 5th note. We will write elaborately there. Next, expenses, correct? Expenses side, can you tell me one by one? First item, cost of materials consumed. Is there? No. Next, purchase of stock in trade. That means purchases is there, correct? What is that? Adjusted purchases is there. Can you tell me how much? 320. So 320 you take here. Next, cost of material consumed over, purchase of stock in trade, change in inventories of finished goods, work in progress not there. Leave it. Next, finance cost. You read the format, then only you will understand what I am telling. Employee benefit expenses not there. There any salaries, wages? No. Next, finance cost is there. Finance cost, debenture interest is there, no. So how much? 20. Debenture interest. Next, depreciation, most important. Depreciation and amortization. P&L account will contain depreciation. Can you tell me how much is the depreciation? 560 into 10%. Sorry, 760 into 10%, right? How much? 76 is the current year depreciation. So what is the next item? Other expenses. What items comes in other expenses? So we will give one note for this, 6. Can you add those items? In other expenses I think I have written. Administration expenses, see here, these 3. Factory expenses 60, admin expenses 30, selling expenses 30, total 120. So can you tell me total expenses? 320 plus 20, 340, 340 plus 76 plus 120, 536. This is total expenses. So total income minus total expenses. Total income 702. Total expenses 536. So can you tell me what is the profit for the period? Profit or loss? Profit. So 3 minus 4. That is total income minus total expenses. 702 minus 536. 166 is the profit. Sir, what is this 166? Current year profit. In the trial balance you are seeing P&L account, that is till opening. Whatever the accumulated profits are there, that profit. So this 166 will be added to opening P&L balance. See, this is current year profit, Nana. See, profit for the period 166. Now that means how many notes to accounts we need to prepare? 6. So let us start preparing notes to accounts. So below this you start notes to accounts. So first one, share capital. First, I think we have equity share capital, preference share capital, both are only equity. Only equity. See, equity share capital. First you need to present authorized. In the additional information also they have given. So therefore, first you need to present authorized share capital. How many shares? You have to clearly write 40,000 equity shares of rupees 10 each. How much? 4 lakhs. That means in thousands? 400. Correct? Rupees in thousands, sir. Sir, whether this authorized share capital is considered for total purpose? No, this is only for presentation purpose. Please understand. Actually, we need to present what? Next. Issued, subscribed, and paid up share capital. Issued, subscribed, and paid up share capital. You see the trial balance and tell me how many shares they have issued. What is the issued, subscribed, paid up capital? 3 lakhs they have given. Correct? See the trial balance, everybody, without seeing the question. If you are solving now, you are not learning anything. You see the question first. What is there in the question? When I said see the question, you see, involve and do. Involvement is the key, important thing. So therefore here you see the trial balance and tell me how much is the share capital they have given? 3 lakhs. Correct? Each share how much? 10 rupees. That means how many shares? 30,000 equity shares of rupees 10 each, fully paid up. You have to write like this. If you don't write, you will be reduced. Marks will be reduced automatically. How much? 3 lakhs. That means 300. So for total purpose, how much you consider? 700 or 300? 300. Don't include authorized capital. Authorized capital is only for presentation. Presentation purpose. That means in balance sheet, how much you will show? 300. So here you show 300. Share capital 300. Next, reserves and surplus, the most important. Most of the students doing wrong here. So please focus, everybody. First of all, identify what are all the reserves and surplus we had. For that you need to see the credit side. So credit side, what are all the reserves and surplus we had, sir? General reserve is there, correct? How much can you tell me? 130. Any other reserve? Securities premium is there. You see the question. We will find out securities premium also. Sir, don't write securities premium reserve. That was prohibited. Only securities premium you have to write. If you write reserve word to securities premium, mark will be reduced. Because that is not a reserve. That is not a profit which is brought by, earned by the business. I told you the logic also. Securities premium, can you tell me how much? 40? 40. That's it, 40. Next, any other reserve? You find on your own and tell me. P&L account. Apart from P&L? Revaluation reserve. Land was revalued. Land was revalued. See. So, revaluation reserve. Revaluation reserve. Can anybody tell me what is the revalued amount of the land? Revalued amount. 3,60,000, 60. What is the original cost? 220 or 40? 20. So how much increased? This will go to revaluation reserve. Guys, understand. See the question. In the trial balance they have given a cost of 220 and they are saying that it was revalued by 360 up to 360. So 360 minus 220, so 140 is the revaluation reserve of the land. So this is belongs to what? Land. For your information I am writing this. Okay. Next, the most important thing is what? P&L account. So P&L account, important. Look at how I am solving P&L account. First, P&L account opening balance you take. Is it given? Where? Trial balance. Trial balance you see and tell me what is the opening balance? 72. See here. For this I am adding current year profit minus interim dividend, because in the question they give an interim dividend, sir. Tell me, sir, what is the current year profit? 166. This is from P&L account. See, from P&L account you take 72 minus 166. Sorry, 72 plus 166. 72 plus 166. 238. From this 238, I am reducing interim dividend paid, given in the question. Tell me. 18. Sir, interim dividend, not final dividend, because final dividend is not considered as current year liability. Therefore, from current year profits, you don't adjust. Hello? Only interim dividend I am adjusting. So, can you tell me what is the closing P&L balance? 220? 220. That's it. So, here this is, most of the students are doing mistake here. So, opening balance 72. Current year profit 166. 238. Minus interim dividend 18. Final dividend should not be adjusted. Why? Because it is declared after 31st March. Therefore, it is not a current year liability. Therefore, it is not considered as a appropriation from current year profits. Is it clear? So, can you tell me what is the total of reserves and surplus? 520. 530. Okay. So, update this in the balance sheet. 530. So, 530. Next, long-term borrowings, guys. I think long-term borrowings only one item, very easy. What is that? Debentures. So 3 long-term borrowings. Can you tell me what is that? 10% debentures. Correct? How much? 200. I think that's the only item. You just present it and they made a total. So long-term borrowings over. Update this in balance sheet. 200. So guys, that means assets, liability side over. Can you tell me the total? 1082. Is this correct, Nana? Okay. 1082. 1082. Now come to asset side. So asset side, what is the first one? PPE. Property, plant, equipment. What are the items in PPE? Land. Land, what is the opening balance they have given? 220, correct? And they revalued up to 360, correct? That means how much increase? 140. What is this? Revaluation reserve. Revaluation adjustment. Can I say this? Yes. Revaluation adjustment. And the most important item is plant and machinery. Very, very important. What is the opening balance of plant and machinery? 770. How much you disposed? Sold 10. Cost. Sir, this opening balance at cost, sir. and you are reducing sale value, the cost of the machinery, 10. So what is the cost of the machinery available, sir? 760. From this you need to reduce provision for depreciation. Provision for depreciation, sir. This is very, very important, sir. Majority of the students are doing mistake here. This you need to understand. Provision for depreciation 172 they have given. But this 172 is not subject to current year depreciation. So you add current year depreciation. Current year depreciation should be added. How much, sir? You see the P&L account, we already calculated 76 minus the asset we sold, in respect of which the accumulated depreciation is there, 8000. That is also will be cancelled. So minus 8. So 172 plus 76 minus 8. Sir, when you sell the asset, the depreciation relating to it will be also be cancelled. That's why this 8000 is minus. And when you, whatever the assets remaining, on that asset you provide depreciation. So because of that your provision for depreciation will increase. So you should add current year depreciation. So therefore here the important point you need to understand is, see, this is like a opening provision, this is current year depreciation, this is accumulated depreciation on plant and machinery sold. Guys, at any cost you have to understand this. Have you understood this? Important adjustment. They will give this question again and again, they will test. Now can you tell me the balancing figure here? 240, yeah? So 760 minus 240, 520. So that means, can you tell me the total? 360 plus 520, 880. That's it. So 880 over. So in PPU you update 880. I think tell me, asset side total 10, correct only na? That's it. Balance sheet tallied. Now coming to P&L account, two things we need to prepare. One is other income. Note number 5. So other income, what is the other income here? Profit on sale of plant and machinery. So sale value, what is the sale value? No. Sale value 4000, correct. Less WDV of plant and machinery. The plant and machinery we sold na. What is the WDV of the plant and machinery? 10,000 is the original cost minus depreciation accumulated on it 8. That means the worth is only 2000. Sorry. Here I need to take 4. So 4 minus 2. What is the answer? 2. In thousands na. Sir, sale value of the plant and machinery 4000, sir. Minus WDV of the plant and machinery. See, whenever you want to find out profit or loss on sale of asset, you need to compare sale value with the WDV of the asset sold. Sale value 4000, sir. WDV of the plant and machinery sold 2000, sir. Sir, how you got this 2000? In the question they said the plant and machinery you sold, the cost is 10,000, depreciation accumulated on it is 8,000. So 10 minus 8, 2000 is the WDV. So you sold 2000 worth of asset for 4000, therefore your profit is 2000. That's what we have taken. This profit will come in P&L account, other income. One more thing, Nana. What is it? Expenses. Correct? What is it? Other expenses. Other expenses, I think we need to take 3 things. What is that? Factory expenses. Factory expenses, one thing. Second, admin expenses, selling expenses. So please tell me one by one. Factory expenses 60, admin expenses 30, selling total how much total? 120. No, no, no. Because here we are, if you read the question carefully, read the last line carefully. What they are asking? They are asking us to prepare the P&L account as per schedule 3. So we are not supposed to prepare trading account here. Our intention is not that. So we are directly preparing the P&L account. So whatever the items is there in the trial balance, they are not get given effect. So therefore we need to consider them in P&L account only. So where will you adjust in P&L account these factory expenses? In trial balance you might accommodate as a part of direct expenses, but you can't accommodate here now. So only option available is other expenses. That's it. So this is one important question, sir, we solved. So approximately it has taken 40 minutes for us to solve this question. But it should come down to 30 minutes. 30 to 35 minutes in examination you should be able to solve. But see, my opinion is, even if you solve this question half, you will get 10 marks around. Balance sheet not tallied, not a problem. P&L account wrong came, not a problem. They will give you stepwise marking. Suppose in P&L account, revenue from operations you done correctly, other income you write correctly, so profit may not be correct, but to the extent you solved correctly now, you will get marks. So that is the advantage of solving big questions. I still remember in my CA Inter, I told you, in all levels I got 60 plus only in accounts. But I don't think so balance sheet is tallied. Balance sheet is always not tallying for me. But I still got good marks. Why? Stepwise marking. So suppose if balance sheet not tallied, 1 or 2 marks will go. Remaining, to the extent you have written correctly, so you will get marks. And one more important thing, sir, here at the end you need to write one note point. What is that note point is all about? Dividend. See here. The final dividend will not be, see here everybody, important. The final dividend will not be recognized as a liability on the balance sheet date. Even though it is declared after reporting date but before approval of the financial statement. As per accounting standard. Which accounting standard? AS4. Hence it has not been recognized in the financial statements for the year ended 31st March 2012. Such dividend will be disclosed in notes only. So therefore in notes also at the end you put one note and write final dividend is not to be shown as a liability as it is declared after balance sheet date. It will be disclosed in notes to accounts. So as per AS4 you write down like this. So when I discuss AS4 you will understand it better. Okay, I am going to discuss AS4. So that means we have completed question number illustration number 2. Now guys, one more important question guys, illustration 4. Come to illustration 4 everybody. I want you to respond. Speed okay na? Please everyone. Speed okay na? Am I going little bit faster? No. Okay, this speed is comfortable to you? Okay. Are you all understanding? Next question, Anna, important question. Fourth question. Fourth question important. Anytime may come in exams. Come to 4. So definitely this question is going to test your ability. Everybody will focus because reading the question is important in this problem. See to what extent you are able to understand this. We'll see. Illustration number 4 I am solving. Please, you are required to prepare statement of P&L and balance sheet from the following trial balance extracted from the books of International Hotels Limited. Sir, whether the name of the company is going to affect the problem? Definitely. Definitely it is going to affect. Because here, see, name in the sense, name convey nature of the business. The nature of business, my intention is, the nature of business is going to affect your problem. Here they are giving about a hotel. Hotels Limited. Now can you tell me what is inventory for hotel? Hotel. Imagine a hotel. What is inventory in a hotel? Furniture. Furniture inventory. Consumables. Perishables. Vegetables, milk, they are inventories. Is it possible for hotel at the end of the year 30 biryanis left on 31st March? Let's put it as inventory like that. 20 cakes. Yeah. See, for a hotel, everybody please listen. For a hotel, imagine, Nana, we are going to the hotels. Suppose I ordered a drink. I want to have a thumbs up there. Now, they brought the thumbs up. Now tell me, that thumbs up is what for that hotel? Inventory. Because they are not manufacturing, na? Hello? But what kind of inventory? Stock in trade, I told you. Inventory basically two. If you are a manufacturer, raw material, work in progress, finished goods. But if you are a trader, stock in trade. Thumbs up in a hotel, for that hotel that is stock in trade. Because they are not manufacturing thumbs up. Hello? Yes, for example, I went to a hotel and I ordered for biryani. Now biryani is what? It is revenue for them, revenue from operations. But to prepare this biryani, they are purchasing rice, they are purchasing pulses, they are purchasing different ingredients and they are put it in the kitchen or in the storeroom. That is their inventory. That is their raw material. So therefore, hotel will have two kinds of inventory. Because they are manufacturing food, they are having raw material called food stuff. Food stuff, not food, food stuff. To prepare biryani, rice is required. Rice is food stuff. Everybody, that rice for hotel, that is their inventory, like a raw material. And at the same time, you went to a hotel, you ordered thumbs up. So thumbs up also they sold to me. That is stock in trade. Therefore, hotel will have two kinds of inventory. To manufacture the food, they have food stuff like raw material and they have stock in trade. But they does not have work in progress and finished goods. Why? Because today they prepared biryani. Will they keep it for 1 year? Or will they keep it till the customer come and eat? No, for hotel every day, fresh cooking. Everybody. So therefore, there is no finished goods, there is no work in progress. So hotel will have only two kinds of inventory. Can you tell me what are those? Stock in trade, raw material. Raw material is nothing but inventory. Will they have work in progress and finished goods? No. Because see, suppose if I am a furniture manufacturer, I am making furniture. So that means that is my inventory, that is my finished goods. That is my work in progress. And to manufacture this furniture, I may have raw material, raw wood. So, but a hotel, you cannot have stages like raw material, work in progress, finished goods. So, of course, they are preparing biryanis, they are preparing different kinds of items. All those are perishable. Every day they have to make. So, therefore, the only inventory as a manufacturer they have is food stuff, like a raw material. And as a trader, they have what? These drinks, cigarettes, cigars. Suppose I went to a hotel, I ordered for cigarette. Now cigarette is what? Stock in trade for them. Everybody. So stock in trade, because they are not manufacturing cigarettes, na, but they are selling me. So that is their stock in trade. So that's why, see here, this problem, why I said important, na, because this is about hotels. So International Hotels Limited. So when you are talking about a hotel, you need to understand. Now how this is going to affect the question, I will show you. See here, we have debit balances as well as credit balance. Everyone please participate here. First they have given authorized capital divided into 5,000 6% preference shares of 100 each, 10,000 equity shares of 100 each. This is what? Presentation purpose only, authorized capital. Subscribed capital 5,000 6% preference shares of 100 each, 5 lakhs. Equity capital 8 lakhs, 5,000. This is we need to consider. Okay. See here, everybody. Purchases first. Hotel purchased. What they purchased? Wine, cigarettes, cigars. Tell me what is this? This is stock in trade. Stock in trade. See, tell me where they will show this. Purchases of stock in trade. P&L account, other expenses. Second item, purchase of stock in trade. P&L account, expenses. First item is what? Cost of materials consumed. Second item, purchase of stock in trade. There they will show 45,800. If you prepare the P&L, expenses, first cost of material consumed, second cost of stock, purchase of stock in trade. Hotel is purchasing wines, cigarettes, cigars. For a hotel, these are all stock in trade. So this will come in P&L account. Expenses. Guys, important guys, please understand. Next they are purchasing what? Foodstuff. What is foodstuff? Ingredients. Rice, pulses. What is this? It is like a raw material for them. Where they will show purchase of foodstuff. Cost of materials. That's it. Cost of material consumed. That means you don't see purchases separately. You will see opening stock plus purchases minus closing stock relating to raw material. Because I told you in my theory discussion. See, you are all becoming Gajanis here. I elaborately discussed all these things. Okay. See here. As a manufacturer, see the first one. Raw material. Relating to raw material, what we need to find out? Cost of material consumed. How will you get cost of material consumed? Opening balance plus purchases. For a hotel, foodstuff is what? Raw material. So will you show purchase of foodstuff separately or will you show consumption during the year? Consumption. How will you get consumption? Opening balance. So therefore, what is the foodstuff opening balance? See here, inventory 5,260 opening balance plus purchases 36,200 minus closing balance. See here, closing inventory of food balance 16,400. Can you tell me? Add these two things. 5,260 plus 36,200 minus 16,400. 25,000. Where will you show that? P&L expenses first item. What is that? Cost of foodstuff consumed. Can I tell once again? See here. First of all, we are talking about a hotel. International Hotels Limited. Think from hotel point of view. Hotel point of view, they are manufacturing food. To manufacture food, they require ingredients. So they purchase in bulk. Rice, dal, pulses, salt, sugar. They will purchase, na? That is their raw material. First thing. Second, hotels will not manufacture certain items like cigarettes, wine. They will directly purchase from others. So that is their stock in trade. They are like traders. They are purchasing and selling to the customers. Everybody. So in schedule 3, when we discuss P&L account, I told you, if you are a manufacturer, you will have raw material, work in progress, finished goods. Regarding raw material, you need to show consumption. How will you get consumption? Opening plus purchases minus closing. That's why you need to identify. you have to immediately get a thought that okay, this is hotel, foodstuff is raw material, so regarding foodstuff what I need to show? Consumption. How I will get consumption? Opening plus purchase minus closing. Now hotel have cigarettes, cigars, wines, they purchase, that is their stock in trade. Regarding stock in trade, what they need to show? They need to show purchases separately. So we need to show these purchases separately, 45,800. That means in P&L expenses, two items over. What are those? Cost of materials consumed. Second, purchase of stock in trade. Regarding stock in trade, one more item we need to show. What is that? Change in inventories of stock in trade. See here. If you are a trader, we will show purchases separately. What about the difference between opening balance and closing balance? Change in inventories of wines, cigarettes, cigars, stock in trade. That you will show separately. That means in P&L account expenses side, first three items over. First item, cost of material consumed. Second item, purchase of stock in trade. Third item, change in inventories of finished goods, work in progress, stock in trade. But finished goods, work in progress not there. What is there here? Stock in trade. Sir, if you want to understand what I am speaking now, first of all, you should be able to recollect what we have discussed in Schedule 3 P&L account. But I don't know, sir, faculty as well as the students, both doesn't know the importance of the Schedule 3. They are thinking that P&L account and balance sheet is something which everybody will do automatically. Not possible, sir. How you are going to solve this kind of questions, tell me? Unless and until you have absolute knowledge towards the expenses side, what items will come. That's why that much time I spend it for the discussion, sir. So see, for this discussion we spend lot of time. But the only thing is that you are not revising the things. So I told you in the day one, revision is mother of success. You have all the time. See, your classes are over by 5. After 5, at least spend 1 hour. Today what happened in the classroom? Just read and recollect. So that next class it will be effective for you. Otherwise it is like dummy faces only. As if every time I am revising the things, but you are leaving like that. Very difficult. Please understand. So I want every one of you to understand this. So the conclusion is, here hotels having foodstuff, raw material, wines, cigarettes, cigars, stock in trade. Regarding stock in trade, in P&L we need to show purchases separately, change in inventories of stock in trade separately. Regarding foodstuff, raw material, we need to show only one thing, consumption. How to get consumption? Opening plus purchases minus closing. Because in that consumption only everything is involved. That's why no need to show separately. But for stock in trade, you are showing purchases separately. What about opening balance and closing balance difference? Change. That's why you need to show separately. What about finished goods and work in progress? Because for hotel, finished goods, work in progress, not there. That's why we are not showing that. Sir, understanding? So this we will show consumption. At least spend some time here. Today I want every one of you to read balance sheet and P&L and come to the tomorrow class. Otherwise it will be very difficult for me, not you, me. Next, wages and salaries, where will you show? P&L account expenses, correct? Employee benefits. Rent, rates, taxes, other expenses, P&L. Laundry, other expenses. Sales, wines, cigarettes, cigars. Revenue from operations. Sir, for hotel selling wines, cigarettes, cigars is revenue from operations. How it is other income, sir? Next, food. Revenue from operations. Hotel selling food, revenue from operations, sir. Coal and firewood. Other expenses. Coal and firewood means cooking. They use now wood. Carriage and coolage. Other expenses. Sundry expenses. Other expenses. Advertising. Other expenses. Repairs. Other expenses. Rent of rooms. Other income. Income, sir. This is income. Credit balance, you see. Income. Rent of rooms, other income. Sorry. Correct only. Correct. Rent of rooms, revenue from operations only. My mistake. Revenue from operations, correct. Revenue from operations, main. Because in a hotel, international hotel, definitely accommodation also they will provide, na? So that is revenue from billiards. Revenue from operations. Sir, billiard games here. In big hotels, you see 3-star, 5-star hotels. So games will be paid, na? That balls. So they have queue, I think. That is called queue, ah? Games, nothing but. Miscellaneous receipts, other income. Discount received, transfer fees. What is transfer fees? See, transfer fees means, you see, suppose I have a booked hotel. In Chennai, I think we have ITC Chola. ITC Chola I booked, for example. ITC Chola I booked. Now they will provide me the cab services, na, from hotel to airport. Suppose I want to see the local sightseeing of this Chennai. So they provide car, right? That is called transfer fees. Transfer fees means hotel will charge from customers the transportation amount. So traveling purpose. So it is like a traveling income for them. Okay? Traveling income. That is called transfer fees. They are transferring me. Okay? Next. So it is also other income, please. Freehold land and building, PPE. Next. Furniture and fittings, PPE. Next, inventory opening balance. Nowhere it will come. Because in balance sheet we will show closing balance of inventory. This is opening balance. But this opening balance will help us to calculate consumption and change in inventories of stock in trade. Cash in hand, cash with bankers. Cash and cash equivalents. Preliminary and formation expenses. This is important. Preliminary and formation expenses. Sir, this is written off to P&L directly, sir. Other expenses. Important, sir. Whenever you see any preliminary expenses, formation expenses, sir, written off to P&L, this is other expenses. Next, debentures. Long-term borrowings. P&L account. Reserves and surplus. Which balance is this? Ayya, tell me. This 41,500 P&L account, which balance? Opening balance. For that, current year profit will be added. Trade payables, current liability. Trade receivables, investments, current or non-current, your assumption. So I am taking non-current. If you want, you can take it in current assets also. Goodwill, PP, intangible assets. Correct? General reserve, reserves and surplus. That's it. Here, trial balance is over. Now see the additional information. Wages and salaries outstanding. What you do? Wages and salaries outstanding means you will add to the corresponding expenses in P&L and you will show it in other current liability. So wages and salaries generally, what is the meaning of outstanding wages and salaries? Incurred but not paid. Therefore incurred means it is part of current year expenses. Therefore in wages and salary they have given, how much wages and salaries they have given? 28,300. So to this 28,300 we should add 1,280. And this 1,280 we will show as a part of current liabilities, other current liabilities. And closing inventory. Depreciation, furniture and fittings, land and buildings, 2%. We need to provide. That's why it is given in additional information. Now the last point, important point, everybody should listen. The equity capital on 1st April 2011 stood at 7,20,000. That is 6,000 shares fully paid, 2,000 shares 60 paid. The directors made a call of 40 per share on 1st October 2011. A shareholder could not pay the call on 100 shares and his shares were forfeited and reissued at 90 per share as fully paid. Okay. So they are talking about equity capital, sir. Equity capital on 1st April 2011. How much, sir? 7,20,000. So 1st April 2011, sir. Please concentrate. What is the equity share capital? 20. 7,20,000. And what is the breakup, sir? 6,000 shares fully paid. So 6,000 into 100 rupees fully paid. How much? 6 lakhs. And remaining 2,000 shares 60 paid. How much? 1,20,000. Now listen to me carefully. What happened? Director made a call of 40 per share on 1st October 2011. Remaining 40 rupees called, sir. Called. But what happened here? Directors made a call of 40 per share on 1st October. A shareholder could not pay the call on, and his shares were forfeited and reissued it as fully paid. Sir, generally when we call they have not made na, what we will do? We will forfeit their shares. Out of 2,000, 100 shares they have not paid and they were reissued, right? So what is the price at which they reissued? 90 into 100. So how much company received? 9,000. But suppose if these shares are not forfeited and amount is received from the original shareholder, how much company might receive? 40 rupees into 100, company might receive only 4,000. Sir, if the shares are not forfeited, if the original shareholder paid the amount 40 rupees, 100 shares, how much my company has received from these 100 shares? 4,000. But how much now received? What is the difference? Now this 5,000 is it part of share capital? No, it is not part of share capital. It is part of capital reserve. CA foundation. You all passed. Okay. Granted. Listen. Please listen. Sir, when shares are... Please here. Learn, please. What is the face value of the share? 100. That means by issuing one share, how much amount you credit to share capital? 100. Because share capital is always credited with face value. But here, regarding this 100 shares, already how much he paid? 60. And from reissue, how much we received? 90. How much we received? 150. That means 50 rupees extra we are receiving from this 100 shares. It is not part of share capital. It is part of capital reserve. So whenever shares are forfeited and reissued, if the reissued price is more than the more than the called up amount, more than the remaining balance I need to receive, that will be transferred to capital reserve. That is not part of share capital. It is like a capital profit to you. That's why this 5,000 will be transferred to. But now you see, in the P&L, in the balance sheet, in the trial balance, how much equity capital they have given? 8,05,000. But how many shares they actually issued? 8,000 shares. Into 100, how much it should be? 8 lakhs. But how much they created? That means that 5,000 also they created. So from this 8,05,000, 5,000 will be transferred to capital reserve. You have not understood. Only 3 or 4 students understood. Remaining students, they are acting like they understood. I know. So, first of all, listen to me. How much equity share capital they have given in the trial balance? Equity. How much they have given in equity share capital in the trial balance? 8 lakhs? 8,05,000. But company issued how many shares? 6,000, 2,000, total 8,000 shares they issued. Correct? 8,000 to 100. Capital should be 8 lakhs only. But how much they created? Why 5,000 excess they created? Wrong treatment they have done. How this 5,000 came? Because the shares which are reissued, forfeited and reissued, 90 rupees we received. Already in respect of those shares, 60 rupees received. 60 plus 90, 150 we received. So, frankly speaking, 100 rupees only should be credited to share capital. Remaining excess 50 should be transferred to. They have done a wrong treatment. So, therefore, now you need to set right. How many of you understood? Raise your hand. That's it. And the directors declared a dividend of how much? 8%. When? 2nd April. Will you consider this as a liability? So that's it. Transferring any amount that may be required from general reserve. Ignore taxation. So this is the question, Anna. So this question I am going to solve after the lunch break. Okay. So you come at 2 o'clock. Take the break. Okay.